Hello, Alan Dawkins, Dawkins Financial. The U.S. elections are coming up really quickly, and they're obviously top of mind for a lot of my clients. So I'd like to bring some information together to kind of ease some of those concerns. There are lots of major investment companies such as BlackRock, Capital Group, Vanguard, Fidelity, Invesco. All of these companies have done studies to determine are there significant changes to the market based on elections. And I have a couple pieces of information here that can kind of shed some light, but spoiler alert, the point is political party doesn't have a significant impact on the economy when we're looking at longer periods of time. In short periods of like the preliminaries, right as we're leading up to elections, there's more volatility in markets typically. However, those markets regain and do quite well after the elections. That's on both sides of the aisle, Republican or Democratic. So I'm not here to talk politics. I will say go vote, but those are your politics. But the data holds true. One of the things that's interesting, a lot of people will say, well, this is the most consequential election ever, or these things are all new. So I have a couple quotes here that I think are quite interesting. When we're talking about the general economy, that's a concern now. Here's a quote. The U.S. central bank is one of the most deadly hostilities existing against the principles of our Constitution. That was Thomas Jefferson. When we're talking about the cost of inflation or the cost of living, public debt is a public curse. James Madison. Another, when we're talking about the federal budget and the deficit, inflation is a gradual tax upon them. That's Benjamin Franklin. If we're talking about things that aren't economic specifically, but maybe they're policy driven, if we're talking about immigration, immigration has served very much to divide the community. Alexander Hamilton. If we're talking about poor leadership, democracy never lasts long. It soon wastes, exhausts, and murders itself. John Adams. And lastly, talking about the country being divided. So speaking of unifying the country, the distemper of our nation is certainly incurable. That's George Washington. So these are concepts that have been going on, as long as this country has existed, and the concerns of how they may relate to the economy are what matters. This is a phrase that you'll hear in investment terms often. It's not timing the market, it's time in the market. And that's absolutely true, that those on each side of the aisle, if they've only invested when their preferred party was in office, they perform horribly. Long term, it's best to stay invested. Having money in cash and trying to time out of fear of the market just historically proves not efficient. And one way to put it is that people care about elections, markets don't. And so there's plenty of data in the sources that I'll cite below this video, so you can take a little study on your own, and I would say read a couple of them. They all come to very similar conclusions, and really it's most important to stay invested, not become emotionally charged by elections, and that will probably serve you and your investments best without as much emotion and concern for your assets and how the economy as a whole may perform. So I hope that helps. Feel free to reach out with any questions. Again, not political, purely economics, and hoping to provide perspective that's greater than this short period, but longer sample sizes. So take a look at the information that I cite, and I hope you find it helpful. Have a great day.